Let's start with a payrolls report. A slight disappointment, but I just wonder whether we've got to start getting used to numbers well south of 200K. What are your thoughts?
So, Jonathan, thanks for having me. No, look, I don't think we should get used to numbers below 200K. I think what we're seeing here is a continuation of a trend that we've seen in the retail industry, and that's something, that we've got to get used to. Had we had a traditional in-store retail Christmas, and we would have added the traditional 20 or 30,000 jobs in-store retail versus losing 20,000 jobs in retail for the month, we would have had a 200,000 number again. So if you really, that's the one number in here that I think a lot of people missed. You obviously saw some numbers come back in the transportation sector and the driving sector. You heard from some of the transportation logistics companies that they couldn't hire enough people. They actually had managers out delivering and driving trucks because they couldn't put people on fast enough. But no, we see the economy continuously growing and continuously adding jobs on. And remember, tax reform is now 5 days old, and the input that's going to have into the economy is just barely starting to have an effect.
Well, Gary, let's talk about the initial reaction of corporate America to the tax cut. The tax cut is permanent, but what I'm seeing is companies to choose to pay one-off bonuses. Are you disappointed by that they take a permanent tax cut and just give a one-off bonus?
Look, I don't think that's completely true. I think companies have chosen to do a lot of different things. You did see a lot of companies raise minimum wages up to $15.50 an hour for their lowest wage workers, which is exactly what we wanted to see. Those changes in the minimum wage workers in these companies are permanent changes to the wage system. As the economy continues to grow and as the labor force continues to tighten, remember, unemployment rate is still 4.1%. It's 17-year lows. We are going to see real wage pressure in here. I've been telling you for the last year that the one disappointing number that we see month after month after month is we saw wage growth of 2.5% against CPI of 2.2. So you see a real wage growth in here at 0.3%. That's just not good enough. And we are committed to get real wage growth in this country, and we do believe you will see it over the course of the next year or two.
And to be fair, Gary, you've owned that, but I wonder whether you support the following thing. New York and California are looking to shield their residents from the loss of state and local tax deductions. If they can do that, is that something actually your administration would support?
Look, I've read the articles of what they're trying to do. I mean, I understand what they're trying to do for their cities and their states and their taxpayers. We at the federal government still have to collect revenue, so we're going to have to evaluate what decisions they make in terms of what it does for overall collections at the federal level in the federal tax system.